Hi everyone. Today we're going to have a conversation about compliance with a really fit person to discuss compliance with, because this is the Vice President of the International Compliance Association. His name is Pekka Dare, and welcome to our YouTube channel. Hi Pekka.
Hi Tony, thank you very much for having me. Pleasure to be here.
Yeah, it's really nice to have you on our YouTube channel, because we have general talks about compliance with many people already, but it's nice to talk to a person who is kind of like responsible for compliance in general, for setting up certain policies, I would say, on a global scale, because obviously you are I would say affecting the global policies by training different compliance professionals all around the world. So as far as I know, you are in the International Compliance Association working with training people for almost 20 years. So can you tell us more about, let's say, why International Compliance Association, what is special about this entity, and what do you do specifically, and what is the general, let's say, importance of continuing education in compliance?
So I've been with the ICA myself for just over 15 years, and the organisation's been going for about 20 years. Mm-hmm. And at that stage we've trained well over 200,000 professionals all around the world with compliance, anti-money laundering, financial crime qualifications. What we are really is we're trying to professionalise the world of compliance and financial crime prevention, and we're trying to raise standards. Mm-hmm. So when we started, we originally were in the UK, but we're now global. We have regional offices all around the world, and we've trained people in over 160 jurisdictions, I think it is now. Mm-hmm. And I think what's unique about the ICA, Tony, is that we're really about raising standards and critical thinking. Mm-hmm. So we look at what good practice really looks like in the real world. It's not academic theory, it's not about how to pass an exam, it's not about learning legal theory. We actually look at the real world challenges that you face if you're trying to fight money laundering or corruption, or you're working for an organisation, you're trying to manage sanctions risk. What does that actually look like? And I think the other thing that's really interesting about us is we're incredibly diverse. So we have our qualifications are really focused around the international best practice standards. So we look at how the US works, we look at how Europe works, mm-hmm. we look at how the Middle East works, we look at how Asia works, and we share good practice from all of those areas.
In for example, your own practice in ICA, do you train all let's say 3 lines of defenses that usually are in regulated companies, meaning let's say compliance officers and frontline people and internal audit people and senior management? How in practice this looks like? Who's coming to ICA for training?
Yeah, well, really great question. I would say the biggest growth we've seen, Tony, is training the first line. Mm-hmm. So we have trained tens of thousands of, for example, relationship managers mm-hmm. in traditional banks. Mm-hmm. And as I'm sure you know that the trend globally is that the first line of defense in a business owns the risk.
Yes.
They are the ones that know the customers or the counterparties or the merchants, whoever they're dealing with, the best. They own those relationships. So they are the ones that need to assess the risk in the first instance. And of course then that can get referred to, and there could be advice for the second line, and then the third line will check,
yes,
and provide support in terms of independent review. So I can't stress enough the importance of compliance training with the first line, because increasingly the trend is that the first line own financial crime risks, anti-money laundering risks, mm-hmm, mm-hmm. and if you don't bring that audience along with you, you are doomed to fail. If the second line tries to own all the risk and do all the controls, you are doomed to fail. Mm-hmm. And I think that collaboration is really important, The third line is also, I think, a really important area to train. So auditors, I think, don't neglect your auditors when you're training, because they need that really good understanding of what good looks like around financial crime prevention. So we do see a lot of the third line. And of course, the second line is still a huge audience for us. If you want to become a subject matter expert, talk to your senior management and the regulators with credibility, you need to demonstrate that you know what you're talking about.
Right.
And we often see regulators challenging the second line to say, well, how do you prove that you're competent? You claim to be a money laundering reporting officer. How do you keep up to date?
Right.
How do you make sure you understand the real risks out there?
Right.
And it's not just getting a qualification, Tony, it's being up to date constantly with all this tidal wave of change that we all see. I think that's some of the real challenges.
It seems to me, maybe I'm wrong, you can correct me if I'm wrong. It seems that this approach that everyone should be aware about the procedures, anti-money laundering procedures, the approaches, the three lines of defense, etc., is like a very, very much new thing. It's not something that happened before. We saw many scandals with involving even like big banks, major banks. Just a recent example I just learned. It was very interesting to learn that Bank of New York, Mellon, and let's say JP Morgan were engaged in helping North Korea, let's say, backed shell companies in China with opaque ownership, wire transfers in the same amounts transferred were round figures, etc., etc. So like all kinds of red flags happened, and it turned out that they helped basically North Korean economy to go around sanctions, and it turned out that they learned about this only years after. So it seems that something was wrong in AML procedures, even in larger banks, even a few years ago, something.
You go back to banking scandals that we've seen for the last 25 years, Tony, and usually you can point the finger at the main owner of the relationships in the bank, who either was not asking the questions deliberately, or was incompetent or greedy, or a combination of all three. And now the move, and it's not perfect, believe you me, and it's inconsistent where you go in terms of jurisdictions, but the move now is to try and very much put that responsibility on the first line to say, right, if this is your client, you need to get comfortable that you understand the true nature of that client. Do you really understand its ownership structure? Do you really understand the nature of its business? If it's a company registered in wherever, New York, yet all the directors are based in China, what is the nature of the business? Why is that? That is not a stupid question to ask.
At all.
If you see nominees in an ownership structure or a complex corporate structure, it's not a stupid question to ask, why is this a complex structure? What is the rationale? And if you can't get comfortable with that, you're not doing your job properly. Now, this is a massive change in mindset, because we're trying to educate people in the first line that actually that sort of business is not commercial in the long term. It's not sustainable business. It will cost you more time, take you away from more valuable new business, and it's counterproductive. But that is still a long journey, and we're seeing some movements, but it's a big cultural shift as well. And it needs all three lines of defence to kind of line up with that message that we want to grow business, we want to do the right sort of business though. It shouldn't, if we do the wrong sort of business, actually it's counterproductive for everyone and society, of course. And I think one interesting thing just to mention, I think ESG is a massive chance to help push that cultural change, because increasingly investors are not just asking about the E element of ESG, Tony, but they're asking about the S element, the social element. How do you make sure you're not dealing with corrupt regimes? How do you make sure you're not dealing with human traffickers? And these things all come back to things like anti-money laundering and customer due diligence. So I think, hopefully ESG is going to give more momentum to people engaged in compliance to push this agenda to the first line as well.
Pekka is absolutely right, saying that it's important to verify the company that you're working with. And of course, the problem is that how to do it, how to verify the directors, the representatives, the beneficial owners, the corporate structure of the company that you're working with. That takes a lot of time and effort. And the easiest and the cheapest and the fastest way is to engage what is called the Know Your Business, or KYB provider. And fortunately, Sumsub does have this solution, which is quite unique. With Sumsub solution, you can actually combine the automated checks against AML lists and corporate registries around the world with the expertise of our compliance officers. So instead of spending hours and weeks for checking the corporate counterparties manually, you can actually verify this with our automated KYC and KYB solutions within as much as 3 hours. Learn more about our KYC and KYB solutions on our website and contact Sumsub today. Thank you. In general, how do you think money laundering is it growing, or is it becoming, or it's getting curbed right now by anti-money laundering procedures? Why I'm asking this question is that, for example, for crypto, just quite recently, Elliptic has published a report on crypto, on financial crime and crypto. It's 100-something pages about different risks that crypto poses, and it seems that nothing goes down really in this sector. I would say even growing. The more and more ways how to defraud systems, how to defraud financial regulations in crypto are coming out. I guess as to cash, for example, just a recent example, 100 million pounds, I think, have been illegally transported from the UK to Dubai. There was a recent case, I think, right now in the UK, through business class luggage, personal luggage of people. They were just flying from the UK to Dubai with cash. And like, as far as I remember, it was interesting. So one time they transported, I think each time they transported something like 500,000 pounds or euros, like each way. So it's huge. So you think about this, the transportation of cash around the world and the transportation of illicit crypto is huge, and it doesn't go anywhere. And so what do you think about this?
Well, Tony, I think one of the things that we need to remind ourselves is money laundering is not an academic, theoretical problem. Mm-hmm. If we boil it back to its basics, which I think is what we can all do when we're talking to people in our organisations that don't really understand the topic, is just take a step back and remind ourselves of what we mean by money laundering. Mm-hmm. Now, money laundering internationally is generally a very broad definition. And we basically start with a predicate crime, an underlying crime that generates profit, right?
Sure.
And then the money laundering aspect is you do something with the profit from that crime. Mm-hmm. So if we just start with that initial concept, if we think about how much money is generated every year from illegal activity all around the world, all of that money has to go somewhere, doesn't it, Tony? It has to go somewhere.
That's correct.
And even just people that are holding that asset, whether they're holding it in crypto, in a wallet somewhere, or whether they're holding it in physical cash, in a suitcase, that is still money laundering, okay?
Right.
So I think the sheer enormity of the criminal profits that are generated every year means that we're not going to stop this problem. Mm-hmm. We're not going to stop it. We are going to push it in different directions, and we're going to make it harder and maybe less economic for criminals to launder their money. Now, you mentioned a couple of really interesting things there. Mm-hmm. I just got back from our conference in the Middle East, in Dubai actually. And we know Dubai has challenges around money laundering, huge amounts of cash coming in, huge amounts of, gold. But also we know that it's got challenges as it looks to become a real beacon for, virtual assets and crypto.
Right, yeah.
So Elliptic, you mentioned it, I think do a lot of great work and analysis around the scale of money laundering in crypto, and they are still, fairly bullish about the low level, relatively speaking, of actual transactions on crypto that are related to criminality, but the scale is just mind-boggling. But what I think the efforts in the last sort of 20 years have done is they have pushed criminals away from traditional sectors into less well-regulated areas. We're seeing criminals looking to move into different spaces. And, for example, one of the areas that still gets not talked about as much as it should is trade-based money laundering.
Right.
The ease and simplicity of falsifying international trade to move value makes it incredibly attractive to organised crime. So I think the starting point for all of our listeners on this call is to probably educate the senior management and their frontline staff in their organisations about the sheer scale of this problem. And if we're serious about fighting it, we all have to play our part, whether we're in a new fintech company, whether we're in a traditional financial services firm, or whether we're in a regulator. But I think the first action is to really understand the scale of the problem and the techniques that are being used to move that money.
We have active discussions with the other industry members about what is called the zero knowledge solutions. The idea is that instead of collecting a lot of information, a lot of data to KYC a person, you just check let's say the verification credentials with some zero knowledge provider, and so the zero knowledge provider will be, let's say, the real, storage of the data. And this is good in terms that the person can be more or less sure that his or her personal data will not be, going around the internet as it, taking place right now all the time. But the problem is, of course, that the key idea of KYC is that you have to know your customer. And this means that you have to collect all this data, and this means that everyone should collect data, and everyone should store the data, and then we have more and more leakage of personal data. So definitely there is some kind of a conflict between the idea of KYC and privacy. Then we have another question related to, let's say, beneficial ownership. Platforms. Obviously, not everyone wants to have his or her name, let's say, connected to some company in a open registry that everyone can look at, etc., etc. So we see that there is some kind of a big fundamental conflict between transparency and privacy. How do you think, as a vice president of the International Compliance Association, how do you think where the progress will go? How will the identity approach look like, and KYC approaches look like in the near future?
Yeah, I think there'll be compromises made. As you say, you look at things like, another example is kind of KYC utilities that we've never really seen take off globally, although we're getting some traction in the Nordics now with KYC utilities, where there's a central reservoir held of KYC data for corporate entities. Now they've managed to get agreement on that. The lawyers have looked at it, the data protection regulators have looked at it, the banks have looked at it, and they've satisfied that they've put in sufficient controls to keep everyone happy. And if you look at things like GDPR and data protection laws around the world, generally speaking, there are provisions for exceptions related to the prevention of financial crime. It's just about making sure that the appropriate controls are in place. So I think there's always a balance to be had here. And I think what's been really heartening is that FATF again and the EU have both published papers on the linkages between financial crime, AML, and data security and data protection in the last 6 months. So people are realising that it is causing roadblocks to actually preventing financial crime. I mean, another example is TBML, Transaction Monitoring Netherlands, where the big Dutch banks have got together and agreed to share their transaction monitoring data and their approach. And again, they've managed to navigate through the minefield of data protection and AML law clashing. And I guess the last big one I would point to success-wise is the proliferation of intelligence sharing bodies between the public and private sector around the world, starting here in the UK with the Joint Money Laundering Intelligence Task Force, JMLIT, and that's now growing out around the world. So in South Africa you have a SAMLIT, I believe it's called. And in fact, in Sweden you have something called SAMLIT as well, same sort of thing. Scandinavia, a lot of these bodies have sprung up, and there are efforts being made all around the world. And again, data protection concerns have been assuaged, and the lawyers have managed to find a way to effectively share intelligence quickly between the public and private sectors, and that's having some really beneficial effects. So I'm actually quite optimistic about this topic.
Another thing that we see among our customers, and I think it's not quite unique situation for just our customers, is that sometimes they are not quite sure about what exactly should be their risk model, and of course someone hires, let's say, consultancy companies, and we know some of them. But as for example, as a international compliance association, your association can, for example, come up with some, let's say, model risk matrices for different types of industries. Even, let's say, a very simple question: which countries to block? Sometimes is not very easy to answer. I mean, you have a gray list of the FATF, but okay, somebody should work with, even with, let's say, some countries that are on the FATF, and they are working actually with them. And sometimes you see, for example, a pyramid of let's say, of different payment institutions. Some of the institutions, for example, can work with, let's say, even with Iran, taking money back and forth, and then it's a high risk, of course. Of course, it's incredible high risk. But then you have another payment institution who works with this payment institution, and then that payment institution already works with some bank, and eventually what you can see is basically more or less legitimate financial structure. So how do you, what would be your comment on that? I think very complicated and very let's say lively situation that we have.
Yeah, well, look, I mean, it's a big topic. For example, one of our international diplomas, we do a whole interactive scenario around designing what we call an enterprise-wide risk assessment. Now, there is guidance out there from organisations like the FATF, like in the UK we have something called the JMLSG, the Joint Money Laundering Steering Group. Wolfsburg have guidance on this. But in terms of understanding what it really looks and feels like, I think that if you think of it like a pyramid, Tony, and at the bottom of your pyramid are all your kind of procedures, your operational procedures. Right at the top of your pyramid for your control framework should be your risk assessment and your risk appetite. Right. So the senior management sets the risk appetite. Then you should do it what we call an enterprise-wide risk assessment. You should look across your whole business and say, right, what type of customers do we deal with? What type of jurisdictions are we in? What type of products and services do we offer? How do we offer them? How good are our current internal controls and our people and our systems? And you have to independently validate those risk assessments. There have been numerous fines from regulators where firms have basically skewed their risk assessment to make a case that all the customers they're dealing with are medium or low risk, because they want an easy life. But when a regulator comes in, they will challenge you and they will say, right, how do you justify that doing business with these category of customers is low risk? Right. And if you can't defend that, then you're in trouble. Yes. From a regulatory perspective. And of course, if you get your risk assessment wrong, fundamentally, you haven't got your controls lined up in the right places, and you're wasting effort and time. So, again, there's jurisdictional risk alone. There are proprietary solutions you can buy that will rank countries in risk for you using 120, 200 plus data points. You know, everything from the FATF, you know, mutual evaluation ratings to, you know, press freedom, you know, to global, you know, corruption perceptions index ratings.
Yeah.
I mean, a lot of smaller organisations do it themselves based on, you know, a range of, you know, publicly available data, which there's a lot out there. The one thing I would say, however you determine your risk assessment, you know, it needs to be credible and based on independently verifiable data so that you can present that rationale to a regulator if something goes wrong, or indeed when they just come and visit you. And there is a lot of guidance out there, but you need to understand, I guess, what good looks like. So one of the pieces of advice I always give to compliance professionals is make sure you build up your professional networks, you talk to other compliance professionals, and you understand what they do. You do some benchmarking. Understand, you know, how our firm does a risk assessment. How does that compare, you know, to other firms in our sector?
It seems to me that the industry, especially when it comes to, let's say, new types of financial businesses and, of course, crypto exchanges, etc., they have huge amount of clients every day, and they are. I'm sure, I cannot say, but I'm sure that they are virtually unable to check, let's say, source of wealth and even source of address of each person, and they're trying to find the ways how to make it happen. In terms of proof of address, the obvious problem is that it's easy to check the address of the person in the UK or here in Brazil. But for example, we have regions where the person just doesn't have any utility bills, and that's it. Can you elaborate here? Obviously, the problem is that you have to deal with documents that are like of different types, and you cannot automate this. This is the main problem right now in the new types of financial businesses. How to scale this and how to work with this, because the way how it's done right now is just not workable.
Yeah. So look, well, first thing I would say is there has been, obviously COVID has massively accelerated the digitisation agenda, and even in more developing jurisdictions, I've seen a really big uptick in embracing digital ID and V and digital eKYC. And you know, you've seen FATF push regulators around the world to start embracing this technology. Because actually, Tony, if you look at some of the solutions in the eID and V space and eKYC space, they are, some of the good ones, far more secure than paper documents. You know, I mean, I'm sure if you go into the web and type in fake docs, you know, you will find numerous websites offering to sell you paper documents which look indistinguishable from the real thing with a name or bank or utility firm of your choice on them. Now, you know, again, regulators are still, it's mixed around the world. Some regulators have been very quick to support firms embracing more digital ID and V solutions. So things like, you know, liveness testing on a phone, for example, links into checking the validity of a passport to a you know, proprietary database of recognised formats for you know, for government issued identity documents. So we are seeing some progress. But like anything, if you're a firm, you have to convince the regulator that the system is appropriate for you. You have to understand how the solution works for you. So maybe that means understanding the underlying technology, whether it's an algorithm that determines whether it's a real human talking to the camera. And you also have to make sure that you know, you can manage all the risks around fraud, for example. But I've seen a real move in that front. The problems you outline around, you know, paper documents, it's just not scalable for crypto businesses to be taking paper documents. And as you say, in many jurisdictions, you know, there is no, you know, recognised form of, you know, universal address identification. So I think it's about joining up all the dots of the great work that's been done on financial inclusion in developing countries in the last few years. It's joining up the work that FATF and regulators are doing on digital ID and V and KYC, and regulators supporting innovation. Because, you know, if we stifle the use of digital solutions to ID and V and address verification, we're going to just block people getting into regulated offerings, and we're still going to push them back into the dark days of cash-based and hawala type transactions, alternative remittance systems, which actually have their own risks as well. So yeah, I mean, look, there's no easy solutions to this, but I would just recommend that if no one's ever read it, have a look at the FATF Digital Identity Guidance that came out a couple of years ago. It's very useful. And again, various regulators around the world have put out really interesting papers on this. Point you towards particularly Singapore, the monetary authority there, put out really interesting guidance on digital identity, digital solutions. So, if you're a firm and you're struggling with how to upscale and move away from bits of paper, have a look at what's out there in the marketplace from vendors, have a look at that FATF guidance, and talk to your regulator. Get your regulator's view on going fully digital would be my advice.
Right, or move to Singapore where the regulator is forward-looking regulator. Yeah,
and listen, I know there are some jurisdictions where that's not the case. I know, so it's a challenge.
Especially we have some jurisdictions where it specifically said you have to collect a utility bill, you have to collect a copy of passport, something like that. And the other problem is that the EID is not very much used right now, and not a great amount of countries right now can issue even the EID documents. But of course that's clearly a problem that we can deal with it.
But look, what I would say is if you're in a jurisdiction like that, Tony, talk to your peer group. Talk to your industry bodies, pressure the regulators, because some of the technology now, it doesn't require a massive credit scoring based system. There are different methods to do identification and verification digitally now, which are exciting and could be applicable and are being used in developing jurisdictions as well, where there are more enlightened regulators. So yeah,
right.
Just keep pushing would be my advice.
Well, the last question, I guess, would be related to the thing that you, I think, you are the biggest expert is in there are different certificates for AML officers around the globe. I mean, there is ICA, there is also ACAMS, there are other certifications. So I'm sure that the audience will be interested in knowing more. Let's say which one is better, which one, not better, but of course, but which one is more specialized in what? What to expect if they go, let's say, to ICA or let's say ACAMS.
Yeah, sure. So look, what I would say is, I believe in what the ICA does. It's an amazing organisation. It's about raising standards and critical thinking. So I say we are truly global. We're unique, Tony, in that we offer qualifications with one of the world's leading business universities, the Alliance Business School of Manchester, which is in the Russell Group universities. We offer qualifications from very entry level, the fundamentals, right up to masters. And our courses are about critical thinking and practical application. We're not just teaching people how to pass a test. They also have an international flavour. So we enable you, when you study with us, to base the studies around your own industry or your own jurisdiction as well. The quality of our courses, again, if you look at the feedback we get from students, people that have done both, there is no, when I talk about CAMS, it's a perfectly fine qualification. But it's very focused on the US.
Correct.
It's preparing around a test, which you do online, multiple choice test. And our qualifications, I would argue, go much deeper, are much more up to date and much more global in perspective as well. And I guess the ICA is not just about qualifications. We have a global membership body with an amazing learning hub with tailored, ongoing education. And we work a lot tailoring in-house training for organisations as well. So, yeah, I think, hands down. Listen, there are lots of training providers out there, but I think in terms of international standing and credibility, if you want to mark yourself out as a subject matter expert and an internationally recognised professional, come and have a look at the ICA. come and have a talk to us, have a look at our website, jump in, have a play around. There's so many great programs we have, and they're being added to all the time. You know, we've just launched a new qualification in AML and the art market, which is a fascinating area, Tony. You know, new qualifications coming on stream all the time as well. So yeah, that's the end of the spiel.
Thank you very much. I know that's very interesting. I would like to wish you success, but it seems that you're already having it, so everything is fine with you. And but I'm sure that after this video you will get more learners than before. Thank you very much, Pekka. Thank you for your time, and take care. And thanks for the audience.
Yeah, thank you very much to you and Sumsub as well, Tony. Thank you, and thank you to the audience. Take care.